Good morning and welcome to a Tuesday edition of Market Update Monday. It's Tuesday, December 27th. I hope everybody had a great holiday. We have a couple of important pieces of information to talk about today. The first of which is the PCE report that just came out, which is the Fed's preferred measurement of inflation. And the reason it's their preferred measurement is that it's less volatile than the CPI number that we also talk about. For the month of November, PCE came in at 0.1%. Increase month over month, which is the smallest number we've seen since October of 2021. The core PCE, which strips out the energy costs and things that the Fed can't have influence over, rose 0.2% month over month, which is also the lowest number we've seen since October of 21. So taken together, we are seeing a dramatic improvement in the PCE numbers, which coincides with the improvement we're seeing in the CPI numbers, which is the other metric we talk about. So if you take a look at this graph here, you can see that the year over year, which is the total of all the month over month numbers, is down to 5.5%, which is a 0.6% drop from October. So a big drop in the last month. And that coincides with the big drop that we saw in the CPI numbers. So this is just more data that's showing that inflation's heading in the right direction. As you dive into this report, some of the more specific things within the report are also encouraging. We're seeing spending slowing down, which is what the Fed wants, and we're also seeing income growth slowing down, which is also what the Fed wants. Two of the stickier items are still resisting the overall trend of inflation, which is the rent expenditures, rent equivalent, and then the employment picture, which has to do with layoffs and the amount of continuing unemployment. So those are things we're going to keep an eye on. Those tend to be the last things that start to move in the right direction. So we'll kind of be looking into Q1 to see those metrics improving. Moving on, the next thing we want to look at is the home price indexes. So we've got two different indexes, which is the Case-Shiller index and the FHFA index. How these two vary, the Case-Shiller index includes all homes, and the FHFA index only includes homes that fall within the conventional loan limits. So it's stripping out the jumbo and the super jumbo markets. So what you see is a similar trend with both of them, which is that, in March they both hit sort of their peak and they started coming back down, and heading into July in the summertime, we were actually seeing a little bit of depreciation in homes. But it appears that those trends are now reversing. It's a little bit early to tell, but if you look at the FHFA, which again is the blue bars, in September we saw a 0.1% increase in home prices, and then in October it's flat, it's zero. And so both of those appear to indicate that home prices are stabilizing, which is a little bit of a surprise. I think we all sort of expected home prices to drop a little bit more. This is by no means a prediction that the home prices have stabilized and are not going to drop further from here, but it's something to keep an eye on. It appears that this timed out with the recent improvement in interest rates. And so as we move into next year, it's going to be very interesting to see what happens with inflation, what happens with home prices, and I think it's all going to be contingent on what happens with interest rates. All right, so moving into next year, we're going to continue to obviously keep an eye on the inflation picture, the 10-year Treasury bond, and how those things together are affecting not only volume, but home prices as well. The next major report we have is coming out January 12th, which is the next CPI report, which will be for November. And we're going to be replacing a 0.7% figure from last year. So we have an opportunity for another solid pickup there. Within that report, we're going to really be taking a close look at the housing costs and the employment side of things. So be sure to like and subscribe. And if you haven't already, go to kfasummit.com to get your tickets to the event on January 27th. We have a killer lineup. You do not want to miss it. KFA.